Welcome to The Explainer. Today we're going to unpack Intel's stock. Because right now, the data's sending some really complex and honestly kind of contradictory signals to the market. Let's dig in. All right, so here's the number, 3813. But look, that's just a number, right? It's just a snapshot in time. The real story, the interesting part, is what all the data underneath is trying to tell us about where this thing is headed. So that leads us to the big question, the one every single investor is asking themselves. But here's the thing with Intel. It's not a simple yes or no right now. It's like the data is telling two completely different stories at the exact same time. You know, the best way to think about it is like a classic tug of war. You've got this team of really positive signals over here, pulling hard one way. And then on the other side, you've got an equally strong team of negative signals pulling in the complete opposite direction. So let's break it down and look at both sides of the rope. All right, let's jump right in. First up, we're going to look at the case for strength. This is the optimist view, the reasons you might be feeling pretty good about Intel's stock right now. So the number one argument for the bulls, the biggest piece of evidence they have is this incredibly powerful long-term trend. And we're not talking about some little blip from last week. This is a really consistent, sustained pattern over time. And check this out, we can actually put a number on just how reliable that trend is. This number here, 0.887. It's something called an R-squared value. Now, don't worry about the math. All you need to know is this. The closer that number gets to 1, the stronger and more dependable the trend is. So a number this high, it's telling us this upward move is not random. It's a really solid pattern. And this right here, this is the bull's key point, illustrated perfectly. If you follow that super reliable trend line, the stock should be trading somewhere around 41.78. But it's actually down here at 38.13. So what does that suggest? Well, to the bulls, it screams that the stock might be undervalued compared to where it should be based on its own history. You can see that same strength just by looking at this chart. The current price, it's way above its 200-day average. This is classic textbook stuff. It's a sign of a really healthy, long-term uptrend. The foundation here looks pretty darn solid. But wait, there's more fuel for this bullish fire. We've also got a strong ADX reading, which is just a fancy way of saying the trend has some real muscle behind it. Then there's the low beta. That means Intel stock tends to be a bit less volatile, less jumpy than the rest of the market. And on top of all that, the risk-to-reward ratio looks pretty good, suggesting the potential upside is worth the risk. You add it all up, and yeah, it's a really compelling case. Okay, but remember that tug of war we talked about? It's time to look at the other team. Let's flip this around, because there are some seriously clear signals that have a lot of analysts pumping the brakes and urging caution. Now, the biggest red flag for the skeptics, their number one rebuttal, is something a little more subtle. It's a sign that big money, we're talking institutional investors, might be quietly selling their shares without causing a panic. Yeah, there's a name for this. It's called distribution. Basically, it's when the big players are getting out, but they're doing it on the down low so they don't crash the price. It can be a huge, huge warning sign that the so-called smart money is losing confidence. Okay, now this is where things get really fascinating. We've got a total contradiction on our hands here. Look, the on-balance volume, that's one way to track where the money's going, it's positive. It suggests buyers are in charge. But then you look at the accumulation/distribution line, another key indicator, and it's deep in the red. That's a huge hint that sellers are the ones winning this quiet battle. They're telling us two totally different stories. And that negative AD line, that's what's really got the bears worried. And the case for caution doesn't stop there, not at all. We're also seeing short-term momentum starting to fade. The relative strength is dropping off, and to top it off, trading volume has been kind of meh, below average. It all points to the same thing. This stock might be running out of steam. So you've got strong arguments on both sides, right? This entire battle, this whole tug of war, could come down to a fight over just two specific price points. Think of these as the lines in the sand. The first number you absolutely have to watch is 38.61. This is the ceiling. In trader speak, they call it resistance. The stock keeps bumping its head on this price and just can't seem to break through it for good. And then, on the flip side, you've got the floor. That's down at 37.31. This is the support level. It's the price that's been catching the stock every time it dips, keeping it from falling further. And honestly, it kind of boils down to this. Which way does it break out of this little channel between the floor and the ceiling? That's going to be a massive signal telling us who's finally winning this tug of war. A decisive move here could really set the stage for whatever happens next. Okay, so let's put it all together. What does all this mean for Intel's near future? Well, the analysis really points to 3 possible scenarios, and we can even attach some probabilities to them based on everything we're seeing right now. So, given this whole mix of signals, the bullish scenario, the one where that strong long-term trend wins out, gets a slight edge, about a 40% chance. The other two, the bearish case where it drops and the neutral case where it just goes sideways, they're both sitting at a 30% probability each. And here's the playbook. This is exactly what to watch for. If you're bullish, the trigger is a clean break above that 38.61 ceiling. That could open the door for a run up to $40. Now, on the flip side, the bearish trigger is a drop below the 37.31 floor. That could send the stock down towards 36. And the neutral case, well, that's just more of what we're seeing now. The stock just stays stuck right in the middle. So there you have it. We've laid out the powerful case for strength, built on that really solid long-term trend. And we've laid out the just as compelling case for caution, with those warning signs of quiet selling and fading momentum. You know the key levels to watch, so that leaves just one final question to think about. In this tug of war, which way is the rope finally going to break?